Hello and welcome to another homework help video. This video continues a series on typical banking problems found in introductory macroeconomics, finance, and money and banking economics courses. Before looking at a typical problem statement and a way to answer the problem statement, let's review some terms and concepts. In most countries, a bank needs to retain some portion of its deposits to meet the central bank's reserve requirements. So let's take a minute to review the terms: fractional banking, deposit, reserve ratio, and required reserves. One of the keystones of understanding modern banking systems is fractional banking. A fractional banking system is where banks and other thrift institutions, like savings and loans and credit unions, accept money for deposit. They use this money to make loans and collect interest on the loans. However, the government requires banks to keep part of the deposits so depositors can access their money if needed. A deposit is the money an individual places in the bank for future use. Required reserves are the part of the bank's deposit, which it must hold in case depositors want their money. The reserve ratio is the ratio of required reserves to deposits. Problem statements may represent the reserve ratio as a decimal, or a rational number or a percentage. If the reserve ratio in the problem statement is a decimal, or a rational number, the formula for calculating the required reserves is required reserves equal deposits times the reserve ratio. If the reserve ratio is part of the problem statement as a percentage, the formula for calculating the required reserves is required reserves equal deposits times the quantity of the reserve ratio as a percentage divided by 100%. A bank's required reserves are part of its deposits. The government requires them to be kept on hand to satisfy the customer demand for their funds. Now let's look at a problem statement with a reserve ratio given as a percentage of deposits. A bank has deposits of $5,000. The country's central bank requires banks to have a reserve ratio of 2.5% of their deposits. How much of the bank's deposits must it hold in reserve to meet the central bank's reserve requirement? Next, let's look at the strategy to find the bank's required reserves given its deposits and a central bank's reserve requirement. 1. Write the formula for calculating the required reserves. The formula required reserves equal deposits times the quantity of the reserve ratio as a percentage divided by 100%. 2. From the problem statement, locate the deposit amount and substitute it into the formula. 3. From the problem statement, locate the reserve ratio and substitute it into the formula. 4. Divide the reserve ratio by 100%. 5. Multiply the amount of the deposit by the reserve ratio. Now let's apply the strategy to the problem statement. 1. Write the formula for calculating the required reserves. Required reserves equal deposits times the quantity of the reserve ratio as percentage divided by 100%. 2. From the problem statement, locate the deposit amount and substitute it into the formula. In the problem statement, the bank receives a $5,000 deposit. So, let's substitute $5,000 from the problem statement into the formula for the deposit. 3. From the problem statement, locate the reserve ratio and substitute it into the formula. In the problem statement, the central bank has set the reserve ratio to 2.5%. So, let's substitute 2.5% from the problem statement into the formula for the reserve ratio. 4. Divide the reserve ratio by 100%. The reserve ratio is 2.5%. So, dividing 2.5 by 100% is 0.025. 5. Multiply the amount of the deposit by the reserve ratio. The deposit from the problem statement is $5,000. And the reserve ratio is 0.025. So, multiplying the deposit of $5,000 by the reserve ratio of 0.025 is $125. The answer to the problem statement is that the bank will need to keep $125 as its required reserves to satisfy the reserve requirement of the central bank. One of the essential pieces of knowledge for understanding modern fractional banking is the idea of required reserves, and an important skill is calculating the required amount. The video reviewed some key terms associated with fractional banking, including the concepts of fractional banking, deposits, reserve ratio, and required reserves. The video also introduced the formula for calculating the required reserves. Required reserves equal deposits times the reserve ratio. The video provided a strategy for finding the required reserves when the problem statement included the amount of money on deposit in the bank and a reserve ratio as a percentage of deposits. Finally, the video worked through a problem statement using the strategy. If you want to try a practice problem independently, there is a link in the description below. If you have any questions, comments, or suggestions, please put them in the comments section below. Until the next homework help video, best wishes on your economic studies.